Hey everyone, and welcome back to the Hacker Stacker channel. This video is intended to be a basic introduction to the concept of trading the ratio. To better understand what this means, let's explain the meaning of the word ratio in this instance. The word ratio comes from the phrase gold to silver ratio. This is a series of two numbers based on both the spot price of gold compared to the spot price of silver. At the time of making this video, gold is $4,985.10 and silver is $103.30. So this can be expressed by 4,985.1 to 103.3. But let's make this easier to understand. We divide the price of gold by the price of silver. 4985.1 divided by 103.3 is 48.26. This is basically the same ratio. And it means that paying for 48¼ ounces of silver is roughly the same amount of money you would take to buy 1 ounce of gold, not including premiums. Folks, I appreciate you taking the time to watch my videos, so be sure to like, share, comment, and subscribe, and hit that bell to get notifications on new content, because it's only with your support this channel can continue to grow. So what does it mean to trade these numbers? It means you're using this number to trade one metal for the other. You either trade silver for gold or gold for silver. To make things easier to follow, I'm going to round off these spot prices. 5,000 for gold and 100 for silver. This makes the gold to silver ratio, or GSR, 50:1. 50 ounces of silver cost the same as 1 ounce of gold. Primarily, when the GSR is down, you trade silver for gold. When it goes up, you reverse that process, trading gold for silver. So let's use a 50:1 GSR to make your first trade. But first, we need to create a fictional stack of gold and silver. Say 1,000 ounces of silver and 5 ounces of gold. I know, I realize some of you don't have this much, but this is just an illustration of the process, not a critique of your stack. At a 50:1 GSR, you would take 200 ounces of silver and trade it for 4 ounces of gold. You now have 800 ounces of silver and 9 ounces of gold. This is analogous to taking 50 $1 bills into the bank and exchanging it for one $50 bill. You haven't lost anything, you've just shifted part of your stack from silver to gold. Now let's assume the GSR increases to 80:1. You decide it's time to switch back. You take 3 ounces of gold and convert it into 8 times 30 is 240 ounces of silver. You are left with 1,040 ounces of silver and 6 ounces of gold. Now, a question you might ask is, well, how much did this cost me? The answer for this practice is nothing. It had nothing to do with the price of gold and silver. If the GSR is 50, you take silver and buy gold. If the GSR is 80, you go trade gold for silver. The price of the metal is irrelevant. And after completing these two exchanges, you are ahead 40 ounces of silver and 1 ounce of gold. Take those two numbers and calculate your net gain based on the spot price of silver today. Now, of course, this is a purely fictional example. Real life, however, tends to be a bit more complicated. Dealers are in the business to make money, so they're going to get something out of it. Usually, they treat the exchange as two separate transactions. First, you're not going to get spot price for what you sell. The dealer is going to be buying short of spot and then sell with a premium added. So in this previous example, you may need 205 ounces of silver to get your 4 ounces of gold when the GSR is low. And when you convert back, when the GSR is high, you may only get 230 ounces of silver back because of the short or back of spot on the gold and the premium on the silver. In other words, both transactions could cost you 15 ounces of silver. But you're still ahead at the end of the day. You've increased your stack by 25 ounces and you still have an ounce of gold to boot. And all without much in the way of fiat currency. You're only using fiat to make up the small differences between the purchase of one and the sale of the other. And each transaction can be made with an amount of fiat less than the price of 1 ounce of silver. Something to remember is you're not going to be doing this every day, every week, every month, or maybe even every year. You may only be able to make gains like this just 2 or 3 times in your life. The GSR doesn't bounce up and down like the examples I just showed you. It can take years for the GSR to swing from one extreme to the other. But the important thing here is for you to understand how simply trading the ratio can increase the value of your stack by simply getting you more gold and or more silver without a whole lot of money. Something else to take into account is buyer's remorse. You might complete one exchange and then instantly regret it. For instance, let's say to yourself, a month ago, you said, once the GSR drops to 60 to 1, I'm trading silver for gold. And had you done so, you might be looking at the GSR today, which is slightly below 50, and say, dang it, I should have waited. It's 48 to 1 now. What a stupid move. This is because you traded your silver back when it was $90 an ounce, and now it's over $100. Now you might be tempted to go back and undo the transaction, but keep in mind, back of spot as well as the premiums. Reversing course so quickly will backfire. You will end up losing metal and losing money. Remember, stacking is a long-term process. It's a marathon, not a sprint. And even if you did a trade a month ago, over time you'll be adding to your stack both gold and silver. And as the spot prices hopefully continue to rise, the increase in both the value and total weight of your stack will eventually negate any perceived loss. In the meantime, stack what you like what you stack, keep on stacking, and I'll see you in the next video.